Tuesday, October 31st, 2017, Monaco 64, home of alternative economics and contrarian views. Today I want to talk about sound money, inflation, gold, the gold standard, economic powerhouses, empires, and I'm going to use the British Empire in the 19th century and Britain in the 20th century and early 21st century as an example of how it's impossible for economic powerhouses to survive without sound money and sound back into their currency. And I'll prove that by looking at the UK data going back to 1800. Am I talking about the fact that I want Britain to become an empire again? No, I think Britain became an empire in the 19th century. Probably more because it was an economic powerhouse. It was, in my opinion, a result of that. I don't think someone woke up in the UK, British government in the early 1800s and said, oh, let's become an empire. I think it just happened because of the economic developments in the UK. So before I go into the inflation numbers, I'll read about 19th century Britain. It says here on Wikipedia, after 1840, Britain abandoned mercantilism and committed its economy to free trade with few barriers or tariffs. This was most evident in the repeal in 1846 of the Corn Laws, which had imposed stiff tariffs on imported grain. The end of these laws opened the British market to unfettered competition, grain prices fell, and food became more plentiful. And it goes on to say, from 1815 to 1870, Britain reaped the benefits of being the world's first modern industrialized nation. It described itself as the workshop of the world, meaning that its finished goods were produced so efficiently and cheaply that they could often undersell comparable locally manufactured goods in almost any other market. And you might think, oh, they must have, nowadays the policy is that if countries want to export, they need to bash their currency to have a cheap currency so they can export more. But and you'd think that Britain did the same thing in the 19th century, but it didn't. So let's look at, and I've taken this from the Bank of England itself. So the Bank of England inflation calculator, and they do use the CPI, which is a measure that, in my opinion, doesn't really account for all the inflation. I think it's the RPI is more indicative of the loss of purchasing power of the currency, but they've got the CPI, so I'll use the CPI. So you can go back as far as 1209 with this calculator, but I've gone back, for example, from 1800 to 1914, which was the year the UK or Britain dropped off the gold standard. They went back for a while in 1926 to 1931, but domestically it was finished as well, the gold standard in 1914. And as you can see, £100 worth of goods in 1800, you'd only need 72 pounds and 59p in 1914 to buy the same basket of goods. So the inflation or the debasement of the currency was actually negative. So the pound was strong, was a strong currency for 114 years, minus 0.3% CPI for those 114 years, which is quite amazing. And you would have thought, with the UK becoming, the place where they manufacture all the goods for the world, that they'd have a cheap currency. But no, they had a very strong currency. So now, and the reason I'm making this video is because this week, the Bank of England is expected to raise interest rates from 0.25% to 0.5%. on Thursday. It would be the first interest rate hike since July 2007, so over 10 years without raising rates. I'm sure there's a lot of people out, in the young people in the city, working in the city, they've never seen a rate hike by the Bank of England. And they think this is really revolutionary, but it used to be normal that central banks had a sound money policy. What gets me is this article here in Zero Hedge says, and it comes from Bloomberg article, it says, while for some officials the economy may still be too fragile to endure a rate increase, Governor Mark Carney and others see Brexit reducing potential outputs, making the UK more vulnerable to overheating. So basically, Mark Carney is trying to blame Brexit and a output, reduce potential output for inflation, while we all know that inflation is created by the central banks and the governments through too much issuance of credit, paper money, debt. That's what, and not having a fixed value for the currency like we had from 1800 to 1914. So this is just a bogus excuse by Mark Carney, because he knows that the pound's going to continue to devalue. You're going to continue to see the debasement of the currency, what they call now inflation or CPI, and that's a wrong term as well, because CPI is a result of inflation. The rising price is a result of inflation. But anyway, now let's compare. This is really fun. Let's compare 1914 to 2016. First of all, I compared. I put 100 pounds. How much would you need now to buy 100 pounds worth of goods that from 1914 in 2016? And look at that, amazing, 10,588 pounds and 78 pence. That's how much you need now to buy the same basket of goods from 1914. And as you can see there, inflation, or their CPI measurement, averaged 4.7% a year. So what's happened to Britain in the last 102 or 103 years since World War I? Well, Britain's gone into decline, and it's still an important country, the UK, but it's not the empire that it used to be. And it's not the economic powerhouse that it used to be. It's not the workshop for the world anymore. And that's in spite of, the currency being completely debased. So for those economists out there who keep saying that you need a weak currency, to have strong exports and a strong economy, you are all, it's a fact that that's completely bogus and wrong. And it's interesting because 1 pound in 1914 was and still is legally the gold sovereign, which is just under 1/4 of an ounce of gold, was a pound. So nowadays you need 106 pounds. So let's see how much you get for one sovereign now. Well, you get 225 pounds for a sovereign. So for all those people who say that gold is a relic and it doesn't protect you, as a currency and as money, it's protected you quite a lot. And I would argue that the debasement or the CPI or the inflation has actually been, the gold, the 1 pound in in 1914 now should actually be about 230, not the 106. I think the gold price reflects that a lot better, or the sovereign price. So, and the other thing I wanted to talk about is a little snippet from this book, When Money Dies, The Nightmare of Weimar Hyperinflation by Adam Ferguson, and how inflation is actually a bad thing for the general public. It only helps creates inequality, and it only helps make those who have wealth even wealthier. And I'm not saying I'm a communist at all. Very much not. Complete opposite. But I'm also saying that we need a sound money system and a free market, free trade economy to grow and to become, prosperous. You've seen what's happened to Britain in the last, 216, 17 years, since 1800. We had a very good run from 1800 to 1914. Sound money, no inflation whatsoever. And in the last 103 years, it's been the complete opposite. And, inequality is growing now. Not saying that there wasn't inequality in the 19th century, but Britain became a lot more prosperous. People could buy, the average person in 1900 was a lot wealthier than the average person in 1800. So on page 205 of this book, the author says, the Renton Bank Directorate tended unashamedly to the right, comprised of large landowners, big industrialists, agricultural interests, and the like. The class of people whom the inflationist policy had enriched and who had escaped paying their just dues to the state. So that there was not much hope of democratic outcome. Am I, saying that things should be democratic or no? I'm just saying that to have an economy that benefits all, and there will always be, the rich and the poor, but it will be fairer under a sound money system. It will give the economy more of an opportunity to grow and even become an economic powerhouse. And to all those economists out there, especially the Keynesians, who think that you need a weak currency to become an economic, miracle or powerhouse, you need to change your theory. You need to. This is bogus. Even like Germany, for example, after World War II, the German mark strengthened against, for example, the British pound, since from 1950 to till now present. And what has the German economy done? It's become an economic powerhouse, a big exporter. So it's just the fallacy, that you need a weak currency to become a strong economy. So if you enjoy this video, please like, share it, subscribe to my channel if you haven't yet. You can also follow me on Twitter and on steemit.com, and I'll talk to you later. Bye.